This example demonstrates the Fibonacci spiral in its more common role as a supplementary layer after other Fibonacci techniques have been applied. The main focus here is a very clear bullish reversal range with clear pauses before and after it. And with the uptrend now rapidly progressing, this area centering on 8750 can easily be referenced. Then apply a moderately sized Fibonacci retracement to capture all these features around its levels. Using this more recent drop is too small of a trend for a trend-based Fibonacci time zone. To get more coverage, extend the trend back to where the Fibonacci retracement begins, where attention will naturally focus up towards this intersection. Now repeat the process except the trend-based Fibonacci time zone is based on this shorter interval. Then we look for approximate areas of overlap with the last trend-based Fibonacci time zone variation. Then for shorter-term context, we can also use the regular Fibonacci time zone at areas where the trend-based Fibonacci time zone fell short. We can try another variation of the Fibonacci time zone and see there have already been intersections at areas where the trend had slowed down. Now as price resumes higher, we head towards the area of most overlap. Now as a supplementary layer, we can try running spirals through these areas of overlap that will be positioned on key features relating to the bullish reversal range, such as candles at upswing points near the beginning and end of the range, as well as the lowest point of the range. Spirals centered around this area of the pause we marked earlier are also a good option, as they're part of an important continuation in the uptrend. These areas indeed turn out to be important. As expected, the uptrend does pause and fall slightly. But since there is no major downtrend and the chart resumes higher at this current intersection area, a minor breakout past this resistance range becomes much more likely in the short term.